How much money can you make by investing in index funds only? Let me show you today. Hi, I'm Bojana. I have been investing for the past 3 years. I'm based in Chicago. I have masters in economics. I have over $50,000 invested. And let me know in the comments any questions that you have about investing. I will be happy to answer them. So let's start with the index funds. What are they exactly? Index fund is a collection of companies pre-selected by a certain criteria. Who makes these collections? Companies that have like specific criteria for like revenue, headcount, size, companies like Standard & Poor's, MSCI, Dow Jones, and they analyze by this criteria. And the companies that, fit that criteria, those companies get added to an index. Fund managers, funds like BlackRock, Vanguard, they form those funds, exchange-traded funds that you can actually buy on a stock market, invest in those, and they add to those funds specifically the companies that are part of the index. That's why those ETFs funds are called index fund ETFs, because they replicate specific companies that are part of an index. So when you're buying an index fund ETF, it's like buying a more reliable ETF, not just a random collection of companies. It's the companies that already have been sort of pre-selected by a bunch of smart people who have analyzed those companies by a lot of different metrics and said, okay, yeah, this company deserves to be here. This company deserves to be a part of S&P 500 or Dow Jones or whatever. When you're an investor with $1,000, if you're investing beginner, it's probably best to go for index fund ETFs because that gives you exposure to a lot of different companies. And if just one company fails, you still have a bunch of other companies. And so you don't completely lose your money. Unlike if you just invest in one company, that company fails, you lost all your money. I have a separate video on ETFs that I own and the metrics by which I analyze each ETF, so please give it a watch. Most people only know about S&P 500. Like, this is the only thing that most beginner investors know, S&P 500. What about other indexes? The major ones are NASDAQ 100, Dow Jones, and Russel 2000. Let's go over each of them. S&P 500 tracks 500 largest companies in the US across all industries. There are 11 sectors: energy, utilities, consumer staples, tech, healthcare, so a bunch of different sectors. ETF examples that you could buy to invest in S&P 500 are SPY, VOO, and IVV. 5-year return for S&P 500 is around 90%. Depending on when you're watching this, maybe lower, maybe higher, but it's been all right. It's been doing great the last few years. NASDAQ 100 focuses mostly on tech. This is a tech index, basically. You have 100 tech US companies. If you want to invest in NASDAQ 100, you want to go for QQQ or QQQM. The latter, the last one, has a lower expense ratio. I don't have it, I have QQQ. But like, if you want to minimize any potential losses, which you could have because it's tech, so it's more volatile, you might want to go for QQQM. Now, 5-year return on this one is about 100%. Obviously, again, tech was growing the last 5 years. We might be bound for correction soon. Dow Jones is the other index, Dow Jones Industrial Average, made up of 30 largest, most established US companies. It's less tech infused, industrials, and just older companies. And it's kind of small. It's 30 companies instead of 500, right? If you want to invest in Dow Jones, you could go for DIA, right? And the 5-year return is around 65% as of today. Who can you find in Dow Jones? Basically, JP Morgan and Chase, Salesforce, United Health Group. So a lot of companies that are like well represented, not like yesterday it was a startup. No. Those are companies that are well known and well represented. And then Russel 2000 small cap US companies. This one is interesting. It's not really that much into tech, although there are some tech companies. It has mostly those like younger companies. For instance, Duolingo, Hims and Hers, those healthcare subscription things. Elf Beauty, right, if you're into beauty. If you want to invest in Russell 2000, you can go for IWM. The 5-year return on this one is about 51% as of today. So as you can see, different indexes give you different returns. You should pick a different ETF to invest in based on your risk tolerance, right? You can definitely say that based just on return alone, NASDAQ 100 will give you much higher return than S&P 500 or Dow Jones, but then Dow Jones probably will not fall as down as much as S&P or Russell, right? So choose based on your risk tolerance and exposure even. There are a lot of very different companies in all these indexes, so pick your poison. If you want to go for like broad exposure, a bunch of different companies, but still have most of your exposure into tech, you can go for S&P 500. If you want to just go for tech, but not be too volatile and invest in individual stocks, tech stocks, the best option would be going for NASDAQ 100, QQQ or QQQM. And if you want to tap into non-tech, but still, high growth potential companies, like Duolingo. Well, Duolingo is tech company, but then it's also kind of edutech, so it's educational, entertainment even in a way, I don't know. You can go for Russel 2000, IWM, or you can go for Dow Jones, something more established, but then you might see that the return is not going to be as high as in S&P 500. What index funds do I personally have in my portfolios? I have a bunch. For SPY, I have more than 10 positions of SPY, and I have made almost $2,000 in return, 1,800. Currently, as of today, it shows 35% return. Then I have QQQ, 4.5 positions, $708 is my return, almost 35% return. VOO, S&P 500, 3 positions, $590. And there is a higher return because I think I started buying VOO at the 2022 dip, and it was so low, the price was so low at that point. So that's why the return is much higher right now, because I bought it at the dip. And IVV, 3 positions, $525. But again, then VOO is less expensive than SPY, so I didn't invest that much into it. But the dollar value of return is lower. And IVV, again, S&P 500, index ETF, I have $525 in return, which is again 35% return. Total dollar value of return I have from different index ETFs I own is $3,638 just by buying them consistently. I don't time the market. I just buy ETF every other month, basically. How do you buy an ETF? I already made a step-by-step tutorial in this video, so please click and watch it, and let me know what index fund you already own or want to buy, or if you already own some index ETFs, what are your returns on them? And if you like this video, subscribe, like it, and send it to a friend who's also eager to learn investing. Let's start investing. And don't wait, start investing today. Bye-bye, see you next week.